Hello traders, this is Frank Paul, one of the mentors at forexmentor.com. I'd like to welcome you to this latest complimentary weekend video presentation. We've been using this slot the last several weeks to profile the Forex News Breakout Trading Course and Service. And I'm going to do that again today, giving you not so much a case study example of how to trade the news, but rather something that you have to watch very carefully whether you're trading the news or not. A very important lesson here that I hope will serve as a useful and poignant reminder for you in your own trading. Again, whether you're trading news or not. And the important note is that if you do define yourself, at least in part, as a news trader, you can't always assume that market moving news, even with a good setup, is going to produce a knockout run. That price is just going to blast through a bunch of levels and give you a nice big profit. We have to pay very close attention to the support resistance environment on the chart for the pair in question, even before we think about taking the trade. If there is a thick band of support on numerous time frames lying just below where, let's say, a short entry setup is materializing on news, you're going to want to think twice and more likely probably not take the trade if that's the scenario. Even if the trend is down, even if you're looking at a corrective rally, even if it's on a whole confluence of resistance factors, if there's insufficient reward to risk potential, you don't want to take the trade. And that is pretty much the theme of what I'm going to show you here today, looking at Canadian Consumer Price Index, or CPI, print for Friday, October 18th. Now, before we get to that, in case you haven't heard about our service before and are wondering what it is, we're talking here about a rational, price-driven, i.e. naked chart method for trading one of two types of technical pattern setups that occur sometimes heading into certain market moving news items. We suggest in the strongest possible terms that you do not try to frame a news trade on the basis of indicator readings, because sometimes they're helpful. Sometimes you'll have a strong trend and it pre-exists the news, and the news comes out and everything's hunky-dory. But I would suggest just as often as not, an important turn that's incited by news will not be specifically foreshadowed by an indicator reading. Indicators more often than not will lag a turn at news time, and by the time you get a sufficiently strong reading, it's often too late. So we have a methodology here for you for identifying when it makes sense to try and take a news trade on the anticipation of a breakout response of some kind. And we do that without indicators of any type. No moving averages, no MACDs, no stochastics, just pure price action. And two specific technical patterns, which we document in painstaking detail in our comprehensive online video course, which is also available in DVD format, divided amongst 12 modules with a running time of over 6 hours. In addition to that, we have a monthly service which is resource rich. It's constantly updated numerous times a week, providing blog entries on news items of interest, analyses of recent news trades, performance tracking, etc. And you can find out more if you're interested via the URL shown here, www.forexmentor.com/FXNewsBreakout, all one word, /index.php, and you can also follow us on Twitter, whether you're a member or not, via this Twitter handle, @FXNewsBreakout. So I'd like to begin by looking at the news environment for today. There wasn't a lot. In fact, this week it was pretty slim pickings. In fact, all of October, I have to admit, is pretty slim pickings compared to earlier in the summer months. What do we do about that? Well, there's nothing we can do about it. Sometimes the news produces a response, sometimes it doesn't. In fact, I would hazard the hypothesis here that the reason why a lot of the scheduled news events of the past more than a week, I would say the last week and a half, have really done nothing is because there was actually a higher level news item of interest, which is not regular, which is highly unusual, which is well, it was scheduled, but it isn't in a normal sense. I'm talking about the deadline for the U.S. government debt ceiling, which was Thursday this week. And I would suggest that the market was really in a strong holding pattern for several days ahead of time, kind of holding its breath to see what was going to happen. Because, as you know from the news headlines, if the impasse was not resolved in the nation's capital, then there was a potential for a debt default, etc., etc. So that not having turned out to be the case, happily enough, for now at least, that kind of let the cork out of the bottle, so to speak, and puts us back into a risk-on environment where stocks have rallied, the U.S. dollar has sold off, the riskier asset classes in the currency market, pretty much everything except the U.S. dollar, advanced. So there was a lot of pent-up energy in the markets, and I think it was all due to that situation, which trumped any and all smaller, lesser priority news events over at least the past week. So some of you who might actually be our regular members watching this video and wondering why October has been such slim pickings, well, a lot of it over the past week anyway has been due to that factor, I would contend. So that being out of the way, hopefully we'll see a greater frequency of tradable news setups in the coming weeks. And I know looking ahead to the last week of October, we've got a particularly active news docket. So right now we're looking at the news calendar tab in the members area, and as you can see here, we have a pop-up for the current week schedule. Now we've updated that, so we're looking ahead to the week of Monday, October 21st, and we've got links to this week's schedule in PDF format, last week's schedule, next week's schedule. So I'm going to just click this link here, and you can see, and I apologize to our members, I had the date wrong here on the very last row entry for Canadian CPI, but hopefully the fact that it was the last day of the week, it was possible to see through that little error. Anyway, scheduled for 8:30 a.m. Eastern Time, 12:30 p.m. GMT, we had Consumer Price Index CPI data for Canada, and the benchmark trade that we suggest you spend your time on for a news event of that jurisdiction is USD CAD. Okay, so we knew what to look at, and I'm not going to spend a lot of time with it, but I'm going to just briefly allude to the fact that we had one of two of the types of technical setups that we look for heading into news. In a very generic sense, what we're looking for is a very brief, not very long-winded reaction which ends a low-level correction heading into news. And that can either be the kind that we see here, or it can be a different type which is actually better displayed by a Fibonacci retracement. So let's say we were bearish, there was a leg down heading into news, we saw a corrective rally, news is scheduled for somewhere in this range here, a corrective top if we're bearish, and then we have follow through like so. That's one of the two types of setups. We call it a continuation setup into news. The other one is like we see here, and I've just drawn a dashed vertical line through the 12 p.m. GMT bar, which of course incorporates the news release for today on USD CAD. And what we saw here, this was old hat by the time news came out. Again, the big news item for this week was a resolution of the U.S. government shutdown, negotiated debt ceiling limits, etc. And so once the threat of a U.S. government default was out of the way, it seemed that that was the big event of interest, and U.S. dollar sold off, USD CAD lower. So we already had a big downtrend continuation underway here. And so price came down to about 1.0280 here. And I've drawn a bunch of little red arrows to show you how heading into news, price had sort of rallied up to 103, the black dash line here. In case you don't know by now, round number levels are hugely significant in the market over and over and over again. It's pretty astounding how often those levels kick in. We oftentimes spend a lot of time dealing with all this fancy sort of Fibonacci-based math, which gives you fairly obscure levels, but those are important, but so too are the round number levels. And what we saw here is in a downtrend, price made a slightly lower low, rallied back up to the round number level here, 5 p.m. on the 17th, pulled back again, tried over the course of 1, 2, 3, 4, 5 hours from 10 p.m. on the 17th, retesting it, fell back, tried again. Okay, so we saw multiple hits of resistance from below our resistance marker in the downtrend as we came to right here, 12 p.m. GMT. And that just absolutely had to be part of your analysis if you are logging in 30 to 60 minutes ahead of time, ahead of market moving news, as we suggest, and doing a proper analysis of support, resistance, market flow, etc. So in that sense, it made every bit of practical sense to look to set a resting sell stop right on that level, 103. The idea being that into news, price might spike up to that level, hit it, retest it, find resistance yet again, and then fall off. And to a certain extent, it did that. I'll remove that line so you can see we had a little bit of a rejection wick. It turned into a spinning top for the 12 p.m. bar. So price came up to that 103 level, in fact, beat it by 2 pips, which is perfect because that would have ensured a fill. And then it fell away again, but not by much. And then price came back up, and later on, towards the close on Friday, tested it yet again. So from a generic trading perspective, 103 looks absolutely great as resistance. But both into news right here and into the close of Friday, it doesn't look like a great short trade right now. Okay, and that's because we have to do proper top-down analysis, even when we're trading the news, even when we're expecting a news breakout, even when the setup looks really good, like we see here. We have to be very, very aware of where support resistance lies. So if you're looking to trade news short, or if you're not looking to trade news but are bearish anyway, you have to pay really close attention to your 4-hour chart and your daily chart. Because doing so, and again, our vantage point is right here. This is the daily bar in question. Whoops. I'm over by 1. There we go. Okay, again, October 18th. Just as it was so crucial to find 60-minute resistance, it was also equally crucial to find daily chart support. Now, daily chart support doesn't have to prevent us from taking the trade, as long as we can get decent reward to risk potential out before we might have to trail the stop to break even, or before the market turns against us from that level. If this distance that we note here from the black line to the green line was, let's say, 100 pips, then you wouldn't be worried about it at all. You go ahead and take the trade, because if price were to travel 100 pips and hit that support target, you're still going to get a good trade. But here, the black dash line shows us the resistance level transposed from the 60-minute chart I just showed you at 103. But I've also drawn this dashed green line below, because what it does is capture a support level lying a little too close at hand to justify the attempt. So we're going back to the swing point low here of August 9th at a low of 102.75. It was retested here on the low for September 23rd. The very next day, September 24th, tested again with a big rejection wick low for September 30th. close to tested the day before, October 17th. The point is, going all the way back to August, numerous times this specific level has been tested as support. And that's a support level that's lying just a little bit too close at hand to justify the attempt if what we're going for here is quote-unquote a news breakout trade. And so in that context, it should not be the least bit surprising to see that the small rejection wick low for today is again a test of that support. So on an intraday basis, we're caught between resistance at 103 and support at 102.75, which is an interval of only 25 pips. If you're going to set your limit exit anywhere, it ought to be in a clear support target. This one just 25 pips below. It's just too close. And as a matter of fact, price missed that target by just a couple of pips, just 2 or 3 pips. So it was possible to take the attitude, well, to heck with it, I'm going to scalp this thing for maybe 20 pips. But our news trading methodology is not specifically a scalping oriented trading strategy. We're not shooting for 20 pips. We're shooting for 50, 60, 100 pips. And if we can't get it, we don't take the trade. And that's the kind of discipline you really have to be able to apply, even if it means that, oh gee whiz, this is the 4th or 5th time this week where there was a news item scheduled and I'm not getting a trade out of it. Because forcing a trade is the surest way to loss. And I'm sure everybody in our listening audience today probably already knows that, but just to reiterate, you don't want to force a trade. You don't want to enter a trade just for the sake of taking a trade. You don't want to take a trade just because this week you've come up empty-handed, if that's the case. Okay, you have to apply the rules, and here what we're saying is that there is a support level. This is a very logical support target, but it lies just too close at hand. There's no way we're going to pull 50 pips out of this thing, at least with a high degree of confidence, and therefore we can't take it. So I just thought I would mention that that is an important element of the analysis. Some people like to trade news on the idea that you're going to get a little spike and you jump on the spike and it's all about the spike, but that's just really a short-sighted way to approach it. Like any other type of news setup, you have to consider the support resistance environment before you decide whether you're even going to make the attempt on news. And of course we explain those elements in as much detail as I can muster within the related course content for Forex News Breakout Trading. Okay, so just a friendly reminder, it's not just about the setup, it's not just about the setup aligning with a trend, it's not just about price having hit a clear resistance level when you're bearish, it's also about, well, where would we expect price to go before it might run into trouble if we were to get into the trade, and is that target far enough away to justify the attempt? And if it isn't, proper discipline requires that you don't take the trade. Okay, so not a particularly stellar example I'm showing you here today, but I am very sensitive to the fact that people on the receiving end of these video presentations don't like to see just the cherry-picked winning examples that show a methodology in its very best light only. We all know that the textbook examples don't always pan out. So I'm just being as honest and transparent here as I can be to show you that this wasn't a winning trade setup. It was a trade setup. It was technically viable, but there are other considerations you have to take into account here before deciding whether to take the trade. And again, that's just a fact of life, and it's one that we do address in our trading course called Forex News Breakout Trading. If you have any questions or comments on today's presentation, please feel free to contact me directly via frank@forexmentor.com, or you can contact our customer service department if you have more general inquiries via info@forexmentor.com. I'd like to wish you an enjoyable weekend. I'm hoping now that the latest U.S. government impasse is behind us, we can look forward to more volatile trending markets going forward in October. And hopefully the next time we get together, I'll show you a slightly more inspiring trade example where everything just lined up perfectly for a nice big juicy profit target. Look forward to that opportunity next weekend. All right, thanks again for joining us. Talk to you soon. Bye now.